What's up, everybody? Today is April 7th, Friday, 2023. We'll be jumping into rule creation, rule base, or objective rules, not subjective rules. We've discussed this in the past, but we never really delved deep into the discussion. This week, Lasagna Cat's going back to the fundamentals. And this is one of the fundamentals that I think should be one of the starting points for a new traders coming in. As you wanna create a nice base. If without a nice base, you're not gonna it's like, a pyramid upside down, you're gonna just tip over. But if you start with the nice base and you have all the fundamentals down, you have all the questions, all the rules that you need to have, then in your journey through the lessons, you can start creating rules for any of the plays that are introduced. There's a few plays that we play. There's fib plays, moving average plays, half candle retrace plays, and you can create rules for those plays. Um, I mainly only trade 4 setups, 3 setups during live trading, 1 setup after hours trading. That being said, if I don't see the HCR play, then I'll go ahead and jump in and look for if there's a fib play, is there a 200 moving average play, is there an RSI MACD play. Um, so we'll go ahead and jump in. When you start creating the rules, um, I developed these initial questions to kind of help you develop your own develop your own kind of thesis. And the reason behind this is you want to teach I mean, Brandon is teaching us and Connor is teaching us, right? But if they disappear for some reason, well, what are you going to do? You're going to go jump to another chat room, most likely. Um, it, Jumping in and out of chat rooms is a little hard because their strategy and their thinking is a little different. And I've been in 3 different chat rooms and they've all traded different and they all thought differently. Even though all of the training rooms were successful or are successful, it's just you got to go to a trading room that fits your style. And if this trading room fits your style, then you want to try to develop skills and techniques on your own that emulate this style of trading. So, like that, if the chat room or the company ever goes under, you're able to continue trading on your own, making your own decisions. And these are some of the questions that I ask myself before going over the daily notes. And that's why you see on the bottom right here is, does your thesis or bias line up with the elite's daily notes? So coming into the day, you want to try to identify the trend, whether it's up, down, sideways, you want to identify it. So usually what I start off with is weekly. What does that trend look like? Okay, it looks up. Okay, let me see if the daily is in an uptrend. If the daily is in an uptrend, that's 2 uptrends. And then I go into intraday. Usually when weekly and daily are in an uptrend, the intraday might be on a downtrend because it's been pumped up. So like HCR or one of the other ones, like Brandon always says, price action doesn't move in a straight line. So you need a pullback. So yeah, the weekly and the daily trend are up, but the intraday is down. But that kind of explains why it's down in the intraday. Another thing that you want to kind of that you want to make sure of, and Brandon does a good job posting the data, that might be coming out for that day or for that week. But you want to make sure that you're not in a trade unless you're certain what direction that's going. And as of recently, it's kind of dicey to be in a trade during data. Most of the time, uh, us elites will get out of a trade before the data, and then we get into a trade after the first move. So to each his own. If you know how to play data days, go right ahead. Me, I never used to play data days. Now I play in data days, and then I play before the data and after the data. Sometimes when I have a cushion, I'll play through the data, but that's only because I have a cushion. Um, that being said, if I am in a position during data, I do have a stop loss, as those candles could be between 20, 10, 20, 30, 40, 50 points. And you don't want to be on the wrong side of that. Um, so then I look at the position of the VIX, TNX, the dollar, and the standard dev. And then after answering that question, because the standard dev is an easy way to know if price action on those three, on the VIX, TNX, and DXY are in an uptrend. It's usually it takes a lot more to see or to flip the standard dev to a downtrend. So the standard dev can definitely help you just give you a bird's eye view of the direction of trend for that given time or for the intraday. So if I notice that VIX, dollar, and TNX are at a resistance, so that means they may come down, and and uh, and I'm long biased, then I'm already thinking, okay, if it's VIX coming down, there might be some more headroom. And then I jump into the longer time frames, 30-minute, 5-minute, and the daily to see, okay, where might the next resistance be for price action for ES in particular. And then I come up with the daily level, the 30-minute level, and the 5-minute level. Mm. And then I work my way up. So I work from my way top bottom, so daily 35-minute. But in price action in the intraday, I'm working my way up. So I go to the 5-minute. Okay, hit the 5-minute level. What does it look like there? Does it look like it's going to get rejected there, or does it look like it's going to smash through? If it smashes through, it might make it to the 30-minute level. But that's kind of guides to help you get in or out of the trade based on other information, of course. Um, so then, has price action been beaten up or pumped up um, lately? Typically, when it's been beaten up, I'm already in the mindset of, okay, we need a bounce. If it's been pumped up, then we need a pullback. So those are just questions that could kind of help you create your bias. And then the last question, is your mind clear? You don't want to be stressed out, mad, sad, even happy, because happy you you might be long bias in your happy mood, and then you want to go in neutral as possible until the chart tells you either to be long, bull, bear, short. Um, and with all that being said, then you jump into the daily notes to make sure you're in a line, or it doesn't matter. Sometimes I'm not in a line with Brandon, and that's good. You don't need to be in a line with Brandon all the time, but you're coming up with your own thesis. As the day plays out, whose thesis was right? And that's something that you may want to journal in your journal. And this is all to help you kind of wean off. I know that I like to be here with elites, but I've been here a while. But if elites were no longer here, these are the questions that I would go with. And I would I would obviously have to pay for the data that Brandon plays, but I would at least be able to trade on my own if I couldn't find a chat room. Um, and I recommend this as I think everybody here is futures traders, but the way you practice this, the way that you practice trading on your own is trading after hours. And the reason why I recommend trading after hours is because you can practice all the plays. You can practice these first 5, 6 questions here. You can practice them on your own and then watch the play work out. So you're building up those skills of creating that bias, playing your strategies, and creating rules. So after hours is probably the prime time to jump in and start practicing your rules. And the bonus part is price action is really slow. It might be a little boring, but at least you can walk yourself through. You don't need to be in a hurry to try to, talk really fast because price action is up and down, sideways, or whatever. So, uh, been talking for a little bit. Is there any questions? Any recommendations, answer, or uh, input from anybody?
When you play day-to-days these days, do you so are there times when you're like, yep, this is a total coin flip, or are there times where you're like, okay, this is like not as confirmed as usual? You know what I mean? Like, do you ever go in when you're like, yeah, this is a coin flip, but I've got my stop in place, I'm just gonna see what's gonna happen? Or is there always like, you know what I mean? Or is there like a much more structured thesis even on like a day, like a data day that you normally wouldn't have done before? You know what I mean?
Yeah, usually when it's a coin flip, or because I mean, there's a couple biases you can have, right? You can have sideways choppy day bias, you can have up bias or down bias. In all those three biases, there's going to be a bounce
Mm,
or a dump, either way, whether you're short or long. There's always plays to be had during choppy days. So let's say like on a data days are sometimes choppy, right?
yeah.
So like I said before, is so I went from a long day. Okay, so the way that I'm a long player. So when I'm a long bias and the trend is up, I'm looking to catch 10, anywhere between 10 to 15 to 20 points, right? When it's choppy, I change my bias to neutral and I'm just looking to catch bounces. And that's the
Mm,
same way that I go in, except my neutral choppy day bias, I'm trying to catch between 6 to 10 points, right?
yeah.
So it's a little bit less than my long bias. And then when I'm in short bias, I'm looking to catch between 4 to 6 to maybe 8 points max. So that's how I adjust.
Yeah. Yeah,
It-
I wasn't even like really asking because like I'm tempted to play like those kinds of like datas. Like, yeah, I definitely do play after the first move, like the safe elites way, or rather
Mhm,
the like, the established elites way. I think that's an awesome way to trade. Like wait for that first move to happen, and wait for the second one to set up. But just the reason I asked about that, like I'm not even like interested in playing like holding through data or whatever, but I'm just kind of
mhm,
curious, like even in those like other situations, it's like there's always safeguards in place, and there's always like some observance of like the elite systems.
mhm.
I mean, because I asked because like for me, like in trading, just any old intraday play, it's like I find that rules like have a way of like obscuring themselves to where like um you see a trade that looks good to you ahead of time, and then you're like, yeah, I'll get in. And then afterwards, you'll be like, if it does work out, you're like, why the hell didn't, why did I even play that play? You know what I
Hmm.
mean? And so I don't know. I was thinking about it, and it's like there's a conversation that goes in my mind before I enter a trade, and it's not one that's geared towards rule following. It's more geared towards, oh man, like the market isn't going to show me anything, like this and that.
Hmm.
Um, and kind of getting on a different topic now, but let's see. But yeah, maybe I'll save that for a little bit later in the session, actually.
Morris.
Hey, Semper.
Yeah.
Guys, quick question.
Mhm.
You just said how, and you've said this in the past, how you're much more of a long play and you look for the longs. This week, and I think yesterday in the comments, I think you said you had like a pretty good week. I think Brandon was asking how everybody did, and I think you said
Mhm.
you had a good week. Now, to me, this week was more of a short week, not in time frame, but like at least 2 of the days were red days. A lot of the price actions seem to be going down. I had a really hard time this week. I didn't trade it all, but just figuring it out, I had a really tough time because again, I'm kind of like you. I it's much easier for me to look for longs than shorts, but it just seemed that this was kind of a more of a shorting type week on average. So I guess my question, when you get weeks like this, and I think you might have answered it already, but so you're not really, when you don't really, just even in weeks like this, you don't really short, you're just looking for bounces. So you're still playing long plays, just much smaller long plays than you would typically look on a long day. Is that correct?
That is correct. So like when it's choppy or down days,
Mm-hmm.
my plays are a lot smaller. No matter what, I'm not changing my max trades because obviously, if I'm a long trader and I usually trade 10 to 20 points, when I can those type of days, I can usually hit my goal, my daily goal within 2 trades. The other, either choppy or down days, it'll take almost 4 or 5 trades for me to meet my goal. If I
And you're
meet my
still
goal.
hitting the long, you're still hitting the long button, the buy button. You're
Yep.
not shorting in these days that are kind of these big short days. You still don't even, you don't short those at all. You just wait
Nope.
for small bounces.
Yep. Yep. Is
Gotcha.
for some reason, even though Brandon's saying it's gonna go short here, or you should have hit the reverse button here, my brain doesn't see it. For some unknown reason, my brain will not pick up short plays.
Right.
Once in a while, it will.
Yep.
And when I try them, it's still 50-50. So that's what kind of scares me off of short plays, even though most of my reds that I've had are on short plays. That's why I tend to stay away from them.
Right. So even short days, you're still looking for a long move, just a much shorter
Yeah.
long move, just a little bounce play,
Yeah,
grab a couple points
exactly.
here, and get out, get in and out. Okay. Yeah, because
So,
I try to like draw a fib, like a short fib, and it's a disaster. It never works for
mhm,
me. I can't get it right. You figure it'd just be the inverse of the longs, but it doesn't seem to be, at least not in my experience.
yeah,
So I have a really hard time. So I was just curious about that. Thank you.
no problem. And like I said, these 4 plays right here, like I'm most of the 90 or 80, 75% of the time, I'm playing this RSI MACD play. 90% of the time. When it's short, like Brandon says, it's short, it's going short. Okay, I'm just waiting. Okay, I'm waiting, and I'll be fibbing. I'll be fibbing out the legs to see if I get a higher low off of the 50% or the buy zone. But let's say Brandon says short and price action is going short, then I'm looking at at this side right here, the fib and the 666 moving average bounce. So you adjust, and that's why having these printed out and in front of you, and you can do this for any play that you use. These are just the top 4 that I use. But if you noticed on all 4 plays, there is, except this one, I always put 3 catalysts at least. If none of them have 3 catalysts, then don't enter the trade. And you could position these on the way that, like, the RSI is. So the way that I created this rule is, I look at the RSI first, and then I look at the MACD, and then I look at price action. Even though I was looking at price action, I want these to look like this. So you create the rule the way that you looking at the chart. So if you look at price action first, then you would put up here, what does price action look like? Or, is it in a downtrend or whatever? But you want to create the rules in the order that you look at the chart and that you want answered. And this is kind of, and I've developed this to help you make a faster decision. Because if you're going off of this play, right, the RSI MACD, and your RSI question is like way down here, you're like, oh shit. And then you have to go back and kind of reassess, and it just confuses you. So I try to create the rules as straightforward as possible as to how I'm looking at the chart. So like the fib level, I'm over here, I'm looking at the price action. Is it a higher low? So if it is a higher low, then is there a first red pullback? If there is, okay, I'm gonna fib that level out, and then you look at, is it touching the moving average? What does RSI look like? What does volume look like? And is it in your buy zone? It's not in here, but that's usually what I have. If it's in your buy zone, and when that check mark is checked on your buy zone, after you have a few other check marks checked, especially this one, you want that one checked. You enter. This is kind of to help you, like, think like a computer. So if a computer sees all these check marks and sees a check mark catalyst or 3 catalysts stacked, then it'll enter the trade. No questions asked, no emotion attached. It just enters.
So like, but by the time you're like running down that checklist, at the end of the checklist, you already know the answer to the 3 catalyst question, because
Exactly.
yeah, that's all established. So it's like, if you've answered all those questions, you get down to the bottom, and if 3 catalysts is an obvious check, then it's like, yeah, I'm doing the trade, like computer style.
Yep. So yeah.
Okay, so this clarifies something for me, like definitely to a pretty great degree, because we were talking about before how like a lot of the elite's teachings tells you like about stacking catalysts in order to enter a trade. And it's like, for me, like I was like, all right, there's all these great catalysts that we look at. But I never decided like, all right, I need this, and this, definitely. Because when I think about stacking catalysts, I think of like, all right, there's these great catalysts over here, so let's like check these out, and like these other ones over here, like we're not looking at. But to me, it's like that just kept them kind of in like categories, like good or not good. And like, if you're just stacking catalysts, like, oh, I think I see 4 good ones, and then like there's some like, there's some negative stuff over here. It's a little fuzzy, and so like over the time I've been in the elites, it's kind of like, all right, there's these new catalysts we can look at, like, which ones are looking good, which ones are looking bad. So it's been difficult for me to like narrow down how to get those specific ones that work for me. And like, I see this is a great way that you got it worked out for yourself, but it's like, that I think, and it's not the fault of like the way the teaching is here. It's just, I think it's the way that I get stuck in my head is what it is. But yeah, I mean, this looks like a good way to navigate that. So at the bottom of your list, it says 3 catalysts, and it's like the questions above that are to determine.
Yep.
Yeah.
And And you could put right here, like whatever, like I put RSI cross. Okay, that's, that might be, this is like half a catalyst. Because depending on where you get the cross, right? You also got to take those rules into effect. So you don't want to write down every rule, but you want to know every rule. Know what I'm saying? Like this question: is there an RSI cross?
Yeah.
The more in-depth answer is is the RSI cross in the overcool or the overheat?
Mm.
Is a MACD cross in the bottom zone or in the top zone? You know, and that's where you kind of gotta go. You kind of just gotta go deeper into those indicators, and that's what's helped me come up with better rules. So, in reference to the MACD cross, if you guys put it on your rules, you're not gonna know the in-depth the in-depth interpretation of that. So to me, MACD, is there a MACD cross? Meaning, in my per per my research, you want the MACD cross if you're going long. If you're going long, you want the MACD cross on the bottom zone, which is kind of inverse of what the RSI is, because the RSI you want it to be on the top zone to be bullish. But to get into a long play, is there a question? To get into a long play, obviously you want RSI to go into the overcool, come back over the 30 line, and then even though there's no MACD cross, okay, but you see the MACD lines kind of converging on each other, or kind of like getting closer to each other, then that's telling you, if you see the MACD closing in, I want to see if I can pull up an example. Um, it's just gonna pull up. Okay, so here's a good example right here. So it's RSI is into the overcool, right? So you get the RSI cross. And I know that RSI is typically bullish on the top side, but if it's been beaten up all day, like it should have been. Let me see. Oh, what the heck? Um, well, it wasn't really beaten up. But anyways, what I was trying to get at is, so you create a rule that MACD is bullish, right? But let's say it's going in the overcool. You got the MACD over the 30. Let's just pretend that you didn't get the cross, the MACD cross, and it went into back into the normal range. Once it goes back into the normal range, and you see it kind of closing in on the red line or whatever color you have, once you see it kind of closing in, your brain is going to start picking up. Okay, in order for that to cross, I'm going to need to pull back down to the 30 and then shoot up. So you're kind of predicting ahead of time what you want to see. So I want to see this pull back for like a confirmation, kind of like the elite confirmation, for it to continue going up. And obviously you got the cross before here, but or you got it right on the back to normal range, then you would get in to go up. But I'm saying that so you guys know the meaning behind my rules. Don't copy my rules. I mean, you can reference them, and if you use the same studies, by all means, copy my rules. But the main thing you want to copy is this right here. You want to get in a habit of this, helping you come up with your own thesis and then look into the daily basis. And then, like, if I would have done this from the get go with the confirmation, I probably would have been that much more ahead. Because one of the hardest parts being in elites is waiting for that confirmation, especially when you first starting out and you got all that FOMO, just you're itching to click that button. It's like, no, you gotta wait for that confirmation to come down. And you're like, but it's not gonna come. It's not gonna come. It might not come that instant. There might be another big fat green candle going up, but 2 minutes later, it freaking comes way back down, and then you're SOL because you got in at the top and you FOMOed, and then you're down 5 or 6 points. Trust me, I've been there, and you don't want to be there.
Yeah, it's funny. It's the FOMO creates that really negative conversation in your head where it's like okay, like price hits support, and then all of a sudden like two huge green candles like pop off. And like you might say to yourself, ah, look at that fucking shit. It's like, there you go. The market hits a level, takes off without you, doesn't pull back. It's never gonna pull back. I missed my chance. Maybe I'll click it right here just because, well, I'll just fucking get it now. And then like it smokes you.
Well,
And
that or you hear Brandon saying, "Well, it's got headroom for another 4 points." Well, you're like, "Oh, I want to catch another 4 points," and you're like, "Let me click it," and then it reverses right there.
right, exactly. And then you might be like, let me, or it might be like, all right, I'll wait for a pullback. I'll wait for a pullback. And then it might just pull back a little bit and you get really antsy and going like that.
Mm-hmm.
Or you might wait for a pullback at what seems like a good level, but by the time it pulls back, enough of the other indicators have changed that it's no longer a good entry. Like maybe volume really flipped, or like maybe I don't know, something else. It could be any number of things, but then
Mm-hmm.
that juicy pullback that looked like a good buy zone like a few minutes ago is no longer a good buy zone. And it's like, and so those are just the things that happen with price action. But like the way that, like, let's see me this past month. There are some things about my month that were great and some things that really stunk. And like these kinds of like self conversations are kind of it, because it's like it's not based on looking for um real evidence of what the market's doing. It's just being like, damn it, I got faked out. Damn it, I missed my chance. Damn it, should I chase now even though I'm not supposed to? It's like, all right, I'll wait for the pullback. Here's the pullback, but indicators have flipped, volume sucks. I'm still gonna get in anyway because I waited. Like all that stuff. And I'm tying this into the fact that you've got all these questions here. It's like I see the possibility that these questions, like under the different plays, what trend is price action currently in? Question, is there higher low? Question. Like those concrete questions I could see, and I'm going to implement this in the next few weeks, on my own set of rules, that these series of questions could perhaps really hopefully neutralize the FOMO conversation that seems natural to traders. That this could potentially stop it in its tracks. Because if your conversation in your mind is like, I missed my opportunity. Oh, the market sucks. Oh, I'll just chase it now. Like that's a shitty conversation. But if your internal conversation is, okay, is there a higher low? What does RSI look like? What does MACD look like? Because that is an actual evidence-based factual conversation. And it's not you and your issues just fighting it out in your head and like your hand being like, oh shit, I'll press the mouse button,
Another reason why I created these rules as questions is because sooner or later, once you get used to your rules or your questions, you're gonna have that conversation in your head, no matter whether you like it or not. You're training these questions in your head. Like for
Yeah.
instance, the reason why this shit works is I don't know how it works, to tell you the truth, but designing them in a question, now I don't get FOMO.
Mm,
When price action goes up too high, Or when price action is high and you ask yourself, where is price action? Well, it's way too high for me to enter. Your brain will stop you from taking that trade, and it won't let you. It I, I have no idea how it works, but there's been plays where Brandon's getting in, and he's like, "Oh yeah, it's got a couple more headroom, because VIX is at resistance, and it's still gonna leak down." And I was like, "Well, you go right ahead. That's a little bit too high for me." Back in the day, when he says I'm getting in, I was getting in with him, but I was probably like 2 or 3 ticks above him, and I was like, "Fuck, I shouldn't have got in," because then you have to hold through some pain to actually let the play work out, and it's like I don't like that feeling.
Yeah.
I don't like that feeling. So when price action is too high and it's hitting its head on either a weekly, not that Brandon would do that, but it's hitting itself on a top Bollinger Band or something like that. My brain's already telling me, no, that's too high. Wait for the pullback. So I think creating these rules as a question is helping you question yourself and helping you question your brain. And then your brain is actually helping you because you already trained that answer into your head, saying price action's too high, don't get in. Or whatever indicator you're using, price action's at the top of the Bollinger Band, don't get in long. Price action's at the bottom of the Bollinger Band, don't get in short. Or whatever it is. Price action's at the 161 fib, don't get in, you know?
Yep. Yep.
And honestly, I don't know but I think it's the reason why it works so well is creating it as a question instead of a rule. Because a question is black and white, right? You're not going to be
Mhm.
able to say, well, it's in the middle of this or it's in the middle of that. It's no, where's price action? And you want that answered in reference to what you use, whether it's moving averages, Bollinger Bands, fibs, whatever indicator you use. You want to ask that question as if it's you're not gonna be iffy about that question. I try
Yeah.
to make it as yes, no answers, but obviously you can't because what trend is price action currently in? Well, up, down, sideways. That's a simple answer, right? Um, is price action high or low? Yes, no. Is there a first red pullback? Yes, no. And if you make them clear black and white answers, you're not gonna question yourself. But if you're like, well, is there a first red pullback to the 100? Or, I don't know, kind of a vague question. You want to kind of a specific question as possible.
Yeah. Yeah, I mean, even the question like, what does RSI look like? That question could have been, does RSI look good or bad? But that doesn't really work because it's open to interpretations. But even in the question like, what does RSI look like? There's only like a small handful of ways that it can look good or bad. So
Mhm.
within those little assortments, it's still easy to determine a yes, no about that.
Yep. I could have put, is RSI bullish or bearish,
Right.
you know?
Yeah.
But like I said, that can be interpreted so many different ways for every different trader.
Hmm.
Because you may trade the RSI only when it's on the top range above the 50. But I'm entering RSI at the overcool to get up to the 50. You know what I'm saying? It's kind of twofold and it just depends on your trading style.
Yeah.
Because if I get in the overcool RSI, my target is going to be the 50 RSI that most likely will align with the moving average or a fib level or a daily trend or whatever. But that's what I'm using as a guide it's like a dipstick, you know what I'm saying? You're kind of guiding yourself. It's like at the bowling alley, you got those rails and it prevents you from going in the gutter. Um, but yeah, good question though, or insight.
Yeah, man. I'm just looking up and down all these different rules here. It's funny because, like, the questions, these are all things that pass through my mind, but they pass through very quickly. And they're trying to and also in my mind, they're not posted as questions. They're just posted as like things just darting back and forth. They're ideas really, like the idea of the MACD, the idea of RSI, like the idea of a crossover, and like what do you call it? But that doesn't count as a rule. Like if something's just in your mind and you know that you should look for it, that doesn't count as a rule because you haven't written it down and you haven't put it in context. It's like, yeah, it's like I know that the pullback to the RSI 50 is a good thing, but I'm not thinking about that in a structured way. All I'm thinking about is, yeah, man, if it pulls back to the RSI 50, I'm going long. And that's not that's not it. Because the thing that's still guiding that internal conversation is I don't want to miss the move. Like it's still just part of that conversation. And structured in question form like this, you're forced to give an answer. You can't just be like, well, kinda. It's like, no, you're forced to give an answer. Is it like yes or no, or is it in this realm of if there's a couple different ways that it could look good, it could only be a couple of those different ways. And it's kind of like if someone's like freaking out when their friends are trying to calm them down, it's like, well, did you do this? Did you do that? And they're like, no. And they're like, did you eat something? And it's like, no, I didn't eat anything. It's kind of like that. It makes it really simple what you need to sort out before making a decision, because this is about making a decision.
Yep. And another, you made a good point. Another reason why this is not in a form of a rule is because rules can be bended and broken.
True.
A question can't be manipulated. Well, it can, but it's kind of a straightforward answer.
Yeah.
And in trading, you don't have time to give you that bullshit answer. You either fucking is there a high or low? Yes or no? Is there a first red pullback? Yes or no? And you're telling yourself yes or no. You're not right there. Just is there a red pullback? Well, it's a doji. Could it be considered as a pullback? Well, technically, yes. Maybe no. And that's where you you start second guessing yourself.
Yeah.
And in all honesty, you should have a stop loss. I should have a stop loss rule.
Right.
Or a question, is it below my support level that I identified? Yes, no. Or you could put, is it a hard open close below my, like in the fib, I would put, stop loss under, and you want to do it that way, is stop loss, and then you can just put, is it below is it below my identified support? A better question is price action, hard open, close below my identified support. And if the answer is yes, and stop out. No questions asked. Just, is that below your stop at your support? And get the fuck out. That is one of the questions. One of the hardest things to learn is a stop loss. And the fib will the fib will kind of help you with that. You know, if you're using the 38 to or whatever it is, the 38% or the 23%. And that all depends with your risk tolerance and your entry. If your entry is at the 50 or at the 38, then a stop loss below the 23% would be a good stop loss. And if you enter at the 50, then you know if you're usually taking stop loss below the 38%, then make that your stop loss. But you would put right here instead of the price action below the identified support, then you would put is price action below a hard open close below my 23%. And the answer is yes, get the fuck out. If it's no, stay in the trade.
Yeah. Yeah, again, yes, no.
Exactly. And like I said, if you have this as a rule, you're always gonna bend it. Well, it closed below the 23%, but the next candle shot up. But the next candle blew through the 23%, and then you're fucked.
Right.
You had a really good question in the pre-meeting.
Yeah, that was we were talking about a couple different things. It was something about where when like stacking catalysts, like which ones do you choose? Might have been that something there. I meant to write it down. I forgot what it was. Yeah, because like I might have mentioned it before, but it was how Elites teaches catalyst stacking, you know?
Mhm.
And like, so it's basically like, all right, so, you know, stack catalysts, like, let's say you've got 4 or 5. Oh yeah, here's what it is. Like, so let's say you have 4 or 5 good catalysts to go long and like 2 or 3 bad catalysts for going long. So it's like, all right, you've got more positive catalysts for going long as opposed to negative catalysts going long. But that still makes it kind of vague because it doesn't say, it leaves it variable as to what those 5 or 4 catalysts could be that are positive. You know, instead of being like, okay, these are the 4 or so catalysts I look at all the time. So in that way, it's been a little bit vague for me to like structure my rules. On the flip side of that, it might be good to be a little bit, what you call it, flexible. But in terms of just stacking catalysts, sort of in like a way with no context, I think I've kind of screwed myself up with that a bit because to make concrete rules, I haven't clarified that yet.
Yeah, and that's a good question because like this week, volume wasn't really there,
Yeah,
but the other catalysts were.
right.
And
All
the
right.
way that I think about it is, okay, 3 bullish catalysts. This is not the real percentage, but this is just the way I can kind of convince myself to take the trade, right? So let's just say all catalysts, no matter what they are, they have 25%. 25%, right? So let's say you stack up 3. Let's say I stack up the RSI, MACD, and the Bollinger Band, but the volume's not there because it's red, and I'm getting in long, right? The way that kind of you're like, fuck, well, should I take it? Or, you know, it looks like sellers are in control. But you're kind of asking yourself those questions in a vacuum instead of kind of broadly because you're starting to tunnel vision.
Yeah.
So instead of tunnel visioning, you guys, you know, in live hours, it's kind of a little bit slower, but you're in after hours. This is why I recommend after hours. You're developing those questions and you're just ingraining those questions in your head. So like that, when you start live trading in futures, you're fucking hitting the ground running. Those questions are already in your head. You don't even have to look at the sheet. And I do recommend that you print a sheet like this out. Like you can, you know, you structure it however, but you want to put the trading questions first. You want to go in the day with some either choppy day bias, long bias, or long or short bias. And then you definitely need a clear mind. So if you're having a fucked up day, woke up on the wrong side of the bed for some reason or another, take it slow. Don't get in right away. Fucking go do. Honestly, the thing that helps me the most clear my mind is go meditate or go work out. Do one or the other, or do both. Um, where was I going with this? Yeah, you want to um you want to go in clear headed. So if you have a fucked up day, don't go in, don't trade, or just take the first 30 minutes off before you jump in. Make sure you're level set. Um, but you want to be able to make up your mind because the volume's not there, right? You said, oh, well, I don't want to get in because there's 3 catalysts and the volume's not there. And like I said before, each catalyst is 25%. So I have 3 bull catalysts versus 1 bear. That's 75% chance versus 25% chance that the trade will go against me. So then you back up, right? And then you could kind of ask these questions interchangeably. Like, for instance, has price action been beaten down, right? If it's been beaten down and you're looking for a long play and it's been beaten down, but the volume's not there, you're like, the volume's not there, but it's been beaten down and there's 3 bull catalysts and it looks like it's basing. Basing, you guys should know what basing looks like. It's kind of like this. You know, it'll bottom out at the bottom Bollinger Band and it'll just stop and bounce at the Bollinger Band. So it's basing. There's 2 things that help you identify basing. The Bollinger Band, one of the major indicators in the Bollinger Band, it starts to flatten out when it starts to base. So when it hits down here, boom, it hits down, the price action hits down, you see the Bollinger Band flat right here. And then you see it bounce again. And another thing that helps you identify the base or that a potential base might be happening is the way the moving averages look. So it looks like it's kind of creating a wave to go back up. You know, they're stacked up almost in sequential order. And it's hitting the bottom, hitting the bottom. You're like, okay, it's basing. And that's what you didn't ask yourself over here. You didn't ask yourself that, but you have a 75% chance, even though it could be higher, you know, depending, because last week or 2 weeks ago, we went over patterns that have different percentage chances of winning. So if a pattern has 85% chance, you have a 75% catalyst stacked up. You do the math, that's pretty much a 75% shot of you creating or the trade going in your favor, even though there wasn't volume. Um, so you just gotta kind of, if there's a catalyst that you like to use and it's not and the trade doesn't meet that catalyst, then you got to zoom out and ask yourself a different question. Like you would ask, okay, so I got 3 catalysts, volume's not there. If you want to reassure yourself, then go fall back over to your second most liked catalyst. Check if that's there, you know, whatever that may be. Because you want to be comfortable with the trade so you can not sweat bullets or shit bricks while in the trade. Uh, I've been there when you're getting the trade and you, as soon as you get in the trade, you're asking yourself, damn, why did I get in the trade? You don't want to be asking yourself why you got in the trade. You want to answer all these questions, and that'll help you identify why you got in the trade. Instead of saying, damn, why did I get in the trade? The answer is easy, FOMO, or whatever it is, you know. But if you answer the questions, if you answer your rule-based questions, you already know the answer. And you'll kind of feel more comfortable just fucking letting it ride. Just okay. I I answered all my questions. The odds were in my favor. Win, lose, or break even, I'm letting this play or this trade play out. Um, and to answer Rocket's question regarding my stop loss on Ninja Trader, when I first get into a trade, if I'm at the computer, my stop loss is mental. My stop loss is below identified support level. If that support level is broken, a hard open close below that level, I close out. If I'm using ATM strategy and I'm entering after hours and I'm stepping away from my computer, I'll put the stop loss, either if I'm using the fibs, I'll put it on my stop loss fib, uh, which is a 23%. I'll put it 2 ticks below. And if I'm at the computer and I'm in the trade and the trade already hits my first target, I then put a stop loss and I attach it to a moving average that I'm comfortable giving back money to. You know what I'm saying? So it hits my first target, it hits my 161 fib. The 50 moving average, so let's say I got in my trade and I already hit my 161. Let's just draw a fib. This is not a conventional fib, so I just want to kind of, let me just draw a bigger fib. Hold on. This is just so you guys have a little bit of context. This is not the way I normally draw my fibs, as you guys all know. This is just so I can give an example. So let's just say I got in my buy zone and it hit my 161 and it shied away from my 200 second target. If it hit my first fib, or if it hit my first target, I do Control Z so you can see the little OC over here, and then I put my sell limit there, and then you can attach it to the Bollinger Band, which sometimes I do because sometimes it'll give me a little bit more profit. But the stop loss, I engage it either by right clicking or whatever. You're gonna put a stop loss over here, and then you're gonna hit hold control, or you can right click like this, attach to indicator properties, and then attach it to VWAP, Bollinger Band, or moving average. A different way to do it, that Permanent Waves taught me or gave me a tip, is hold control, and you click on the order, and you hover over any moving average that you want or any Bollinger Band that you want. So if I want to give it more headroom to be able to hit my target, I will usually attach it to the 50. And that gives it enough room where it can come back down to the 100 and maybe run back up. If I want it to be tight, then I'll attach it, and it'll ask you this: do you want the manage to be managed by an indicator? You say yes. It's gonna change it to a different one. It's gonna change it to the. If you hit no on that question, it's gonna leave you back over here. So the odds of me getting stopped out right here are a lot higher, but I'm not gonna give that much money back. Um, I can just leave the computer. I'm happy whether it hits my stop loss or it hits my limit. I'm happy. You know what I'm saying? So that's the way I usually do my stop losses. And you close them out, and then you want to hit Control Z again, because if you try to put another order, you're gonna get an error message saying that you cannot control um you cannot control what it's gonna hit. But Tom has a question. When you draw your charts before the day of trading, what app do you draw on? TOS or Ninja or TradingView? I typically use Ninja. Um, that being said, I concentrate on weekly trends. The fibs I do on Ninja, and I use SPY, the dollar, TNX, and VIX as a reference. So I have both of them up. And sometimes when ES is not that clear or I can't find a level, then I'll go fib it out on TOS. I'll fib out the SPY. But most of the time I draw my stuff on the ES chart. They should all what's up?
Question, Semper.
Yeah.
Appreciate your time.
Yeah, no problem.
When you draw a fib, I'm confused about where to start, where to go with a Fibonacci. You know, do I start at the bottom of today, or the pre-market low, or yesterday's close, those kind of things?
Okay.
I'm confused about where to start.
So there's a few criteria that you can use the fib at. There's like the body of the data candle on the 5-minute. So you can go to the 5-minute, and then you can fib just the body of the data candle. So that's one. That's one way you can draw it. So you just grab it here, and since price action is creating higher lows, then you would swing it. You can get the tip, top, or we're just doing the 5-minute body right now. So this is a criteria for data candles. And Brandon says you fib the body out. Another way you can do it. So that's a 5-minute candle, and it should go over here. So you did a 5-minute candle. There's a fresh red pullback, but here's a better pullback, because I mean, to me, it has interaction with the Bollinger Band, right? So there's your buy zone right here. Here is your buy zone. And this could be adjusted. Some people's buy zones are right here in the 50%. I have since adjusted it to be anywhere between the 38% and the 50%. So you could have averaged. Usually what I do, I'll put an order out right here, and then I'll put another order out here, just to kind of average down. And if it closes below the 23% down here, hard open close down here, I'm out. So that's one way to do a fib. So another way to do a fib. is on another way to do the fib is, I need a better day than this. And go to the, sorry, go to the open. So another way to do the fib is the first leg, the first move, right? So market opens right here at 6:30. So you just sit on your hands until you see the first move. First move, you're like, what the fuck is the first move? Is it the first candle? No. First move is the first leg. First leg is the first, in this instance, it's the first green pullback. So this one you're going short. You get this candle right here. You can go to the candle right there and go to the top wick of the doji at the open. There's your buy zone again. This one you could have you probably would have missed your order. Everybody draws fibs differently. You could have gone up to the tippy top, or you could have gone all the way to that top. But by then you're kind of already out of the trade unless you got in right here. But when using fibs, you want to target the 161, the 261. I normally target the 161 and the 200, depending on how spread out, because sometimes price action, the number, like right now, this is 1 point, which isn't shit. Sometimes if you're using the weekly fib, these points will probably be like 20 points in between. And when it's stretched out that much, let's say there's 10 points between the 50 and the 100. If there's 10 points between the 50 and the 100, I'm getting out at the 100. That's 10 points in futures is a lot. That's totally up to you. I've come to find out. So then you're like, oh shit, well, there was a short fib. So how do I get in long? Well, you see it basing right here. You see it kind of just, there was some sort of support right here. So then where do you fib? You're like, what the heck? Where do I fib? You want to fib, let's just say it's price actions like that. There's your first red pullback, and it has interaction with the 50 moving average, and it's perfect. But it's creating a higher low. When it's creating a higher low, that means it's a long fib. So you come over here, you get your fib tool out, and again, you can go from the way that I first started getting them or drawing them was, here's the first red pullback. I want to get all these 3 candles right here. So I'll do it like that to the bottom. Or you can get this candle, and this candle. So I just do it there. So I kind of did like an average. Again, where does it come to? The buy zone. And it squeezes up. And this is a great example of a basing. This is a great example of basing. As you see it kind of pop up the same area. The moving averages are all stacked up perfectly. See it? 200, 200 EMA from the slowest to the fastest. They're all stacked up sequentially the way that I like it. Perfect. If I seen this, I would have got in right here at this buy zone. Because you got the MACD cross, you got the RSI creating higher lows. you got TTM, you got a volume beat. This is not a volume beat because you're right here. You want to try to look for volume beats in the consolidation zone. So right here, anywhere between here. So is there a volume beat? Started out right there. Green volume beat. Okay, there's that. There's another green volume beat right there. So there already, you're already, the way that I look at the chart is I see RSI divergence right here, even though it's still going down. Look at right here. It's still going down, still going down. And now it bases. When it bases, you see price action base, you see it kind of bottom out right here, and RSI will be in the overcool. RSI will be in the overcool. The Bollinger Band will be there as support, and that's your base. All you got to look for is a MACD cross. Boom. Okay, so how do I get in? As a professional trader, you'd probably get in somewhere over here because you got the MACD cross, you got higher lows RSI, you got volume stacking up right here, so you probably could have entered anywhere right here. Now, a novice or a beginner trader, you're like, fuck, I don't know how to enter this trade. You just fib it out. How do I enter? Well, we'll leave this to the pros. I like this candle, even though there's a even though there's a red pullback right there. I like this candle better, just because it has interaction with the 100 or the 50. Like I said, from here to there, it's not that big of a difference. It's gonna be 401 or 41.05 to. It's gonna be about a point difference. But I like these. Something, I don't know, just you can always adjust it to this one too, because it has interaction with the 200. You could have gone there, but you would have waited a lot longer because you would have fibbed it out right here, right? So right here, you had had the failed 161 pullback to the buy zone, back up. But if you wanted to get in that trade, you would have got in right here. As soon as you seen this candle, put a fishing order out to the 61.51. It's just to whatever you like. Lasagna Cat said he posted some videos so you can, when you draw the fibs, you can kind of get somebody else's opinion. And fibs, if they're like 1 point, 1 point, they're almost always going to work out. 1 point, I don't think is that much of a difference. So you could have fibbed it out right here, got in the buy zone, and went up to your 161. So yeah, hopefully that answers your questions. Feel free to look at those videos. If you have any questions, reach out to me, DM me. You could DM Lasagna Cat, any of the other. Susan's a great resource for knowledge on the fib. She's actually one of the elite members that was on the fib video, and she does them totally different. She uses a fib extension, but Brandon explains that the fib extension is the same as a fib retracement if you draw them the same. But yeah, look at that video with Susan. If you like, go into Teachables and search Susan. I think she has 2 videos, but look at the one that has a fib. And then the following day, Brandon jumps into the fib lesson a little bit more in depth. But yeah, if you have any other questions with the fib, if you're having issues with the fib, or when to use the fib, just let me know and we'll clarify it. But yeah, you could go here if you want a longer play. There's always fibs that you can draw. You could, excuse me, you could have drawn from the 200 right here down over here, and that was just getting that bunch of averages with this bunch of averages. And if you're using Bollinger Bands or moving averages, whenever the buy zone lines up with the moving average or a weekly or daily support, it's a strong point. That's like stacking a third or fifth catalyst. But yeah. Any other questions? Did you want to jump into your notes, Lasagna Cat?
Oh yeah, I could absolutely. Um, just also for anyone who's watching is curious about fibs, those two lessons that Semper was just talking about, the one with Susan and the one from the following day with Brandon. Uh, yeah, those are I just posted them in the futures chat in Discord. And also they're just, if you go in the Teachable, it's June 8th, 2021 and June 9th, 2021. So all good. So check those out if you want to learn about fibs. But yeah, I just this week I took some notes about a new indicator I'm looking at. A sec. Yeah, and so like I'm taking this month off of trading because my psychology kind of got a little screwed up in March, and I took a red month, and so I'm stepping back and just studying some stuff. So I was checking out this new indicator called the RSI Crossover, and it's just an adaptation of RSI, and it I'll take the screen share. Yeah, and so what this does is it just plots like these little arrows to show you when the RSI crosses over, is signaling that a setup could be coming up, you know, to go long or short. I only use them to go long because I'm only doing long setups these days. But here's a slide that I took. I'm just going to show you some examples. So here's an example of what I mean. It's these little arrows that pop up. Now, when you see an arrow, it doesn't mean, okay, now it's time to get in a trade. It just means that like, okay, there might be a setup coming. And so it's a good time to like, and it will coincide with like, okay, it you know, price action might be entering, like coming close to a support level, something like that. It might, you know, coincide with RSI overcooled starting to recover. And it might coincide going over here to where the MACD is. It might coincide with the MACD cross that's happening. But I'm finding that there are a nice visual representation that the setup could be coming, and that, you know, it's a little flag for you to start looking for your setup and your catalyst, and maybe to start, you know, asking yourself some questions that might be on those lists of like, you know, your checklist for your rules and stuff. So it's pretty cool the way it works out. And these are on this is the 1 minute chart. These are both MES. It's the same chart actually. It's just that I've got the MACD over here, which is cool. So it's like on a setup like this, it's like a pretty good Bollinger Band setup with, you know, we got a support level here, and you know, got some closes outside and then some candle opens inside the Bollinger Bands. And then, you know, you get the arrow popping up over here, and you get the Bollinger Band setup happening. TTM sellers stepping out of the way, RSI overcooled, recovering. And then like a big pop up, you know, and I've got another copy of this chart where I made a fib, and you can catch pullbacks here to go long. Let me just show you. All right, yeah. So, you know, if you combine this with the fib entry, you know, maybe you draw out this fib here. Actually, I had a lower fib drawn here, and it made a good entry here. This fib drawn up here didn't quite make a good buy zone. Actually, it made a perfect buy zone entry. What am I talking about? So yeah, you got your arrow signal here, but you're just watching and stacking catalysts. And then over here, it did get a good interaction with this fib buy zone. And it got really good continuation this move for the rest of the day. And in fact, got my SPY chart here as well. So this is SPY, you know, the same move. And you got your arrows, and it just played out really nice. And this is where that fib entry would have been. And it sailed up really good. So those are from Monday. Now let's see. All right, this is another one from Monday. Same kind of deal, similar. So on this one, the arrow appeared, and the Bollinger Band setup was pretty good, actually. A big red close outside the band, and then another candle, and then a nice open within the band on support. This is actually a fib drawn earlier in the day. After RSI overcooled right here. And if you go over here on the other side of the screen to MACD over here, we got the MACD cross also. So on this one, you could have this is the very candle that the MACD cross happened on. So if you drew a nice little fib here, coming back to this ad zone, you know, you could have potentially caught a nice move up there. And that could have worked out. Pretty good workout. I don't know if that's necessarily a play that I would have taken, maybe. I think probably, yeah. Except there was no previous high or low, but still a pretty good setup. By the way,
That's a setup where you would see that red candle, right? You would see that red candle and the top one where you fit from.
Yeah.
And then right like instantly then like start looking at the MACD. What does MACD look like? It looks like it's closing in on the average or whatever those lines are called.
That's what it's doing. Yeah, it's closing in.
So you're closing in, right? You see it closing in after getting so far spread apart.
Yeah.
You look at the MACD, you're like, I'm putting a fishing order on the buy.
Right.
I'm putting a fishing order in the buy zone.
So you already like that MACD look, even though it hasn't come to a cross yet.
Exactly, like 2 or 3 candles before that, you're already like, oh yeah. And the thing when watching it live is that you'll see it like this, right? You'll see it kind of like this,
Mm-hmm.
and then you'll see this line, the bottom line, either go up or down, and it like keeps redrawing it. So it'll be like this, and then let's say the candle goes down, so then it'll kind of go like, it'll, instead of pointing up, it'll kind of just flatten out, and then again another tick comes by, and then it's closer to that one, and you're like, oh shit,
Yeah.
it is gonna cross. So it can kind of help you justify putting that fishing order out. You know what I'm saying?
Yeah.
But if you see it like it's way over here and MACD is right here, and you fib that out, you're like, I'll wait a little bit longer.
Yeah. Totally.
You know what
Totally.
I'm saying? Those are all
Yeah.
indicators that kind of help you make a decision and make you feel warm and fuzzy to be able to put a fishing order out.
Yeah.
And
Yeah.
those are things that you should be looking out for. You don't want to be like, oh fuck, well, how am I gonna take that trade? Well, what does MACD look like? Okay, it looks good. It's looking like it's gonna cross. RSI right here making higher lows too.
Yeah.
Yeah, you just gotta try to identify all the little small information that'll help you make a bigger decision.
Yeah, absolutely. And you know, and it comes from like, you know, in terms of like, you know, when and how do I draw a fib? It's like, all right, if you see like a move happening off support, then just go ahead and like start drawing your fib where like, you know, like follow the candles up, drawing your fib.
Yep. And
You know,
that's a good way to do it, because you, like, let's say you fib it out from here to here, right? How you did.
yeah,
And these candles are not there,
right.
right? But you're like, but here's a first rep pullback. So you can kind of draw it out just to talk yourself through the trade.
Yep,
So you're like, what do I want to see next? Well, I want to see a higher low off that buy zone.
that's right.
I want to see volume, and I want to see TTM, and I want to see RSI on top over here on the bullish side. And you use those things to make up your decision before, you know. And if it doesn't make a higher low there and it makes it down here, well, then you can kind of invalidate that fib
Well,
right
yeah, yeah.
right away.
And then you can also be like, all right, it's back down there. So we're going to do a little bit more weighting and maybe it'll turn into a double bottom, or it could keep going down or whatever.
Yeah.
But you're following the price action. It's like you said, it's like you're asking yourself, what do you want to see? And you mentioned the this MACD closing in right before. So it's like at that moment that you draw this fib down, MACD is one of the first things that's showing you that it could happen.
Mm-hmm.
And those indications, you know, they're visible to you to stack up. You know, it is possible to be very binary with this stuff in terms of, does this look good or not? You know, and it's going to come down to screen time and, you know, just understanding how to look at it. But, you know, and in terms of like this RSI crossover arrow thing that I'm looking at, you know, again, it's not just enter at the arrow, it's the arrow is saying, all right, maybe on this push up, there'll be a place to draw a fib that looks good. All right, maybe. So I'll do that. All right. I would like for it to come down to the ad zone for an entry, just like Semper was saying. What else do I want to see? It's everything that Semper just said. And it's just like, look at, you know, that first indication and start looking from there. Same as like, you know, from the beginning of the morning, like price action comes down to a support level. It's like, okay, what else do I need to see at that support level in order to interest me? You
Mm-hmm.
know, I'm not going to jump in, but what's it going to need to show me to interest me?
Yep. It's kind of like going on a blind date. You know what I'm saying?
Yep.
What do you want to see on the blind date?
100%.
You know, and
Because
if you see
you
what
don't
you
know
like,
until it's going to show up.
exactly. It's like the arrow is like, oh, great. The blind date called me. We're on for a date. Okay, let me see.
That's what it is.
Let's wait. Okay, she's coming to range, or I want to see a pullback. Oh, I want a hot blind date or whatever it is, whatever.
Yep.
Oh, perfect. It matches up to what I want to see. You know, am I gonna marry her? No, but I'll take her out. You know,
100%. Yeah.
I
Oh,
don't
and I've got another slide here. I mean to cut you up. I got another slide coming up to show a blind date that didn't work out. So that one, that one's coming up. Matter of fact, as long as we're on that topic, maybe I'll pick that one up. But do you have any more to add about this slide?
No, you're good.
All right, cool.
But like Lasagna Cat said, there's only so much that you can learn from us, from either the group or from Brandon or Connor. The other 50% is screen time. You're not going to be able to identify all these little nuances of the chart without putting in the screen time. And you're not going to feel comfortable until you have that screen time in.
Yeah, screen time is reps in the gym.
Mm-hmm.
Here's a blind date that didn't work out. Got the green arrow there, which is, you know, the blind date saying, yeah, okay, we can meet up. And then you know, but look at that, there's no clear support there, and volume looks bad. This looks like whatever, you know, that does look like pretty good TTM for going long, but you're looking at no volume.
Yeah, 3 green bars versus 10 red bars that are almost double the size. TTM indecision.
Yeah.
RSI is still in bearish territory.
Yeah, 100%. So, you know, and who knows why this arrow even fired here, which is why, like, you don't take an indicator at face, like, you don't take a single isolated indicator at like, you know, I was going to say face value, but like, you don't just see something and say, okay, the coast is clear, all my dreams are going to come true at the click of a button. It's just, you know, it's just there. So
Yeah.
this is someone, yeah. This
You
is
want,
like someone calling you on the phone and you screen it, you don't even pick up.
yeah, exactly. You want, and this goes back to creating the rules. When you create a rule, you want it to be objective rule, meaning there's other criteria or parameters taken into consideration before taking the trade. A subjective rule is, oh, I saw the arrow, I'm getting in. But you're just getting in because you saw arrow. You don't have a plan for that arrow. You know, when you
Yeah.
make quick indecisive decisions like that, well, you made a very decisive decision,
Right. Right.
but
It's like if you see a spot where there's no available support and tons of red volume, if you were to try and draw a fib from this first red pullback down to here, and then think about just placing a fishing order here and hopefully go long, it's just not going to happen. I mean, it
mm-mm.
could happen because anything could happen, but you know, you see an arrow and you're like, all right, how's volume looking? Well, it looks fucking awful. It's like
Yep.
you see arrow, how's RSI looking? And it's like, well, it recovered after overcool, but what's it going to look like when it hits its head on the 50? You know, it's a lot of different stuff, and it becomes easier to spot.
But the way that one of the questions you should be asking yourself, just looking at the screenshot, the first question you should ask yourself, what trend is price action in? From the looks of it, well, the standard dev kind of looks like it's kind of giving you false, because that's your standard dev, right? The green and the white lines, dashed lines.
The white is VWAP, but yeah, this green is standard dev.
But is that +2
Center.
center?
Yeah.
So you're already looking at a downtrend. Volume is heavy in seller volume. Yeah, you got that arrow, right? But that
Right.
arrow, you're asking yourself, it's in a downtrend, right? Where do you see a possible pull back? Well, when the RSI hits a 50.
Hmm.
A short player, not that I'm not that I'm a short player, and I'm thinking Brandon would have probably done this, is a short player would have been, okay, I'm looking for a retrace. Where's the retrace? Right there at the 50 RSI. I'm getting in short right there
Right.
because that's the confirmation of continuation down.
Well, yeah, because we got a downtrend here from free market and what you call it, all the down volume. So yeah, it makes sense that you'd be looking for a retrace to short, which is probably continued real good.
This would have probably been a safer bet if the moving averages were on the bottom,
Yeah.
over here acting as support instead of on top acting as resistance.
Yeah. I have a question about this this MACD look as well. So like the MACD looked like it came up for the cross you know, when price action was kind of here. And I remember watching this at the time because I had it stretched out like this so I could see it well, was it came up really abruptly. Like it wasn't a nice gradual close up. It
A-
just it was wide and then it snapped.
And I'm glad that you described it that way, because that's something that I've noticed with the RSI as well.
Hmm.
Sometimes the RSI, see right here where the RSI kind of takes its sweet ass time and it goes up. It goes
Yep.
up, down, and then it hits a 50. Right here, it just went up,
Yeah. Yeah. Yeah.
hit the 50.
Yeah.
You don't want to see that.
Right.
You want to see it like this. Go up, okay. Right here, there might be a small pullback, because why? Because you want to see a pullback to regain strength to be able to smash through it.
Yeah.
But if you see it like this, where it just shoots up,
Hmm.
you're gonna expect a pullback.
Yeah, 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 for sure.
And that
It's like
same goes with the RSI. Sometimes you want to see it like tick by tick, just one tick closer every candle. You don't want to
yeah,
see it do a 3-tick move and a 1-tick move. You know what I'm saying?
mm-hmm. This here is like the hyperactive kid who jumps up in the air and hits his head in the ceiling and comes back down real quick.
Yep.
Yeah, it was the first time. Like I've only started watching MACD for like, a little while now, and that's the first time I noticed that really abrupt snap up. So
Yeah, that's thing that you need to pay attention to because it's kind of gonna tell. Well, it's going up way too fast. It's gonna hit its head.
yeah, yeah, yeah,
And
for
then what
sure.
happens? It's a kid hopped up on
Yeah,
the trampoline, hits his head on the fucking roof or the
right.
ceiling, and then crashes out because he's
Yeah.
too tired.
Yep,
Got
yep.
that sugar crash.
Hell yeah, straight down.
Same thing. Instead of a little kid, just normal plane. Next thing you know, he's climbing up on top of a bookshelf, and then it hits his head on the shelf.
Yeah, man.
But
So we
yeah,
got, I don't know. That was a good example. It's just like a really good example of how an indicator is just like, one of many.
it it's exactly what it is. It's an indicator that indicates a possible move.
Right.
But when you stack up 3 or 4 indicators that might give you that more stacked up catalyst, like I said in the beginning, 3 catalysts, let's just average them out 25% each, even though some of them have higher percentage.
Right.
One indicator by itself is not going to outweigh the other indicators, right? Because it's 25% versus 75 or 80%.
Yeah. I mean, so would you say that there are certain indicators that weigh heavier?
Yeah.
Yeah.
I haven't really done my research like I did with the patterns, where it gives you a success.
Yeah.
But I think that's what a lot of price action traders have against indicators.
Right.
Know what I'm saying? Well, indicators will always work if you can always make indicators work. Well, of course you can always make them work, but can you make them work together? When
Yeah,
you
for
make them work,
sure.
when you make them work together, that's when the odds are better.
Yeah, yeah, no doubt. Were you referring to that like a few weeks ago when you shared those screenshots of like the most probabilistic setups?
Yeah.
Yeah, yeah, yeah. That was cool for sure. Yeah, I don't know. I'll do a little bit of looking into like I mean I'm sure there's a way to research like which indicators are maybe outweigh the others. I don't know. I mean,
That might help you, but then that might also hurt you because let's say the RSI has a 60% success rate or a
yeah,
70% success rate when it goes into overcool or overheat, and the MACD has a 25% success rate. You're gonna be like, man, I can't trust the MACD.
yeah, you might just get stuck in your head. Yeah, it's like it's one of those. It's funny with trading because you're always in danger of like the too much info danger. It's
Yeah,
like,
exactly. Is there too much indicators on my chart, or am I getting confused by all this lines and
yeah,
indicators, or is this actual valid? And that's where y- the individual trader finding their system, their strategy.
yeah,
And that's where I would like for you to take your next step, since you're kind of back to square one, is find that setup
yeah,
that you feel the most comfortable with. And then we'll start from there.
yeah. To me, it's like this setup that we're about to look at is like very similar to like the kind that I'm the best at. Like let's say like comes down a little bit. It's kind of like a reversal play. This one was a little screwy because it was like right before data. Even though it is like still like perfectly trending up, it was kind of like flat topping and looking a little suspicious for a little while.
Mhm.
Um, but support, I forget where the support was. This is MES, or it's probably support on SPY. But that nice Bollinger Band close and open look, and then like fib out from up here, then wait for the pullback because you got like higher lows here. So you get a nice fib out from like the 21 moving average, ding ding, and then there's like a nice ad zone there. Um, but the way that I was scoping this out was when I see something like this, it's like, okay, are we going to find support sometime soon? And I saw like, well, for one thing, this arrow went off, and I was like, I don't even give a shit because I don't trade this early, but let's see what happens. And it went up, slap back down. Similar to that last bad date example, was like it was preceded by heavy red volume. So it's like you see this heavy red volume and an arrow shows up, and it's like, really, what do you got? Like, you know, maybe not much. I don't know. It had RSI overcooled, but there's all that volume after the open. Anyway, I didn't pay it much mind, and it came down. But when I did start paying attention was when I saw this one, just because like, okay, we came down a little while. And let me just see if there's any support on SPY, because I got another slide here. My bad. So that's the SPY 5-minute. Yeah, I don't know. There might have been some support there. I'm not sure from the SPY, but anyway. My bad. Let me get back on track. So I saw this candle, I mean, this arrow. So I was like, all right, let's keep our eye out. First thing I noticed was that RSI was overcooled. That was one of the first things I looked for. There's still all this red volume, like chasing it down, but I sometimes feel like you need a lot of red volume to get yourself down to where the support is at. You know, you need volume to beat something down, and a good time to get in long is after it's been beaten down. So I was like, well, maybe this is just beat down volume, you know? So I was looking at the RSI overcooled. I was like, all right, that could indicate something. Watched it come down a couple. So again, it's like you see the arrow, you don't just like start jumping for joy, you let it go. You wait. And so obviously I didn't have this fib leg drawn yet. So just pretend the fib isn't there. And so it came down. They put in this doji, which I noticed. I noticed the RSI overcooled. And then I noticed this one. When I saw the second one, you know, fire off, and this came up, I was like, all right, that looks like it might be starting to be a thing. And so it came down again. I was like, huh, interesting. I was tempted to draw a little fib from right here, you know, because it came into these little very short-term MAs right here.
You could have, and then slowly adjusted it to where you fibbed it out.
Absolutely. I mean, this would have been the buy zone of that fib. I'm almost certain, like at least the 61.
Yeah, definitely.
Yeah, and that could have been a really good entry. And at the time I was like, would that be an entry for me? I was like, well, I don't know, like there hasn't been a higher low yet. And I was like, all right, let this be the higher low if that's the way it goes. And it did. And so when I came up here, and it's also pretty good practice just to like start drawing your fibs kind of early just to see how stuff works out. So to begin drawing one there was totally cool. And then I drew one up here because that's the 21 moving average. It's like the nearest one. And that created a really nice ad zone there. And so what candle are we looking at here? So this is where it comes down to the ad zone. But you see this candle right here, this green where it hit the where I drew my 100 from. That's this guy here, same chart. That's where the MACD cross happened. So by the time it came down to the ad zone, the MACD cross had actually already happened 2 candles ago. Here's the top of the fib. It's actually where the MACD crossed. And then I have a whole 2 candles grace for it to come down to my ad zone. Now I know if I were actually following this trade to play it, there'd be a part of me that'd be like, oh shit, look, the MACD already crossed, I should get in now. You know, like maybe even closed up here. And I was like, let me get in now. The MACD just fucking crossed and fired. So I think that's a danger zone for me. Looking back, it's like so perfect. It's like, wow, you got confirmation MACD before coming to your ad zone for the entry. That's fucking awesome. But putting myself into the moment, I might have been like, all right, MACD, let's enter now. Then again, this wouldn't have stopped me out at all. But I could see myself getting the itchy trigger finger at that point. And I'd be curious to like, I don't know, maybe I'm just overthinking it, but I could see myself doing that.
I think one of the best questions to add to your rules that might prevent you from FOMOing or getting in too slow or too fast is, where is my best entry?
Yep.
So answer that. Maybe put, where is my first best entry? Where is my second best entry?
Right.
So like that, it hits your first entry, you miss it, right? And then you're like, oh, but it's still my second entry. I can
Yeah.
still enter. So you can enter there. And then if it passes your second entry or your second best entry, and be like, let it go.
Yeah. Yeah. I mean, because that would be for me, like, let's just say I'm playing the 61 and 50 ad zone. It's like the 61 is right here. Like, so my best entry would be like the 50, I'll say. Like, that's ideal, completely ideal. Second best would be this one. Because it's fairly ideal, but just a little bit higher. It actually would have missed this one by like, I think 1 little degree. What's it called? 1
Tick.
tick? Yeah, degree. Oh, it must be Friday.
But the reason why I say that is because I usually I've never really written down this rule, but I practice it.
Yeah.
I ask myself, where's my best entry? My best entry is at the 50. My second best entry is like 4 or 5 ticks above that in the middle of the buy zone. And if my second best entry gets filled, but my first one doesn't, oh well, let it go.
Yeah. Yeah.
And just play whatever you got in whatever skin you got in the game, and let it
Yeah.
play out.
I mean, you're absolutely right. And especially since like a lot of real savvy players have their buy zone between the 38 and the 50, like that should kind of ease some of my fidgety mind in the sense that like there's still this
If you're
very
not,
premium, very premium entry,
it is premium, but if you're not ready for that premium, then don't do it.
I
Like
feel you.
like
Yeah.
I said, my entry zone was 61 to 50. In the beginning, it was a 61,
Right.
right at the 61. I would
Yeah.
not enter at the 50. Well, I take it back. I entered at the 50 a few times and I got burned. So I was like, fuck this. I'm
Yeah.
not. Now that I'm a little bit more experienced, now I moved it down anywhere between the 61 and the 38.
Well, you got burned a few times using the 50 in the beginning because like, would you like do the 50 like coming up from here or something, or?
That a few times, and then it coming back down to confirm in the buy zone, and it would just smash through.
Oh, okay. All right. Yeah. So
Hey,
like,
if
What's
you
up?
got burned at the 50, how does going into the 61 help you? Because 61 seems like you get super burned if the same type of thing happened, right? If you go into the 61, you're gonna get super burned. If you got burned at the 50, you're gonna get really burned to the 61,
It
right?
would, but what I discovered when I was adjusting that thing was that I wasn't paying attention how it was coming down into the buy zone. After discovering, oh, okay, I want to see small candles coming into the buy zone. I don't want to see like, like these candles right here. I don't want to see that. Like, uh, like I want to see these types of candles coming into the buy zone, not like these types of candles coming into the buy zone.
Right.
Um, but I don't know. I don't know because most of the time when I was entering at the 50, for some reason, when I put my fishing order out, because that's the way that I started using fibs, is just using fishing orders, no buy bid, nothing like that. And for some reason, it would just smash through the 50, and sometimes the 62. But I was more comfortable, and that's where I kind of reflected was, okay, why can I enter at the 61 but not at the 50? And that's why screenshots help in your journaling. If you go back and you're getting smoked at the 50, and I started looking at the candles, I was like, yeah, these are very bearish candles. Like they're like full body, like these ones right here. Not like this where they're kind of wicked and getting smaller. And I was like, oh shit. Okay, so let me adjust it. So then if I start seeing a red candle like this, I mean, that's the buyers in control, but the sellers are, the sellers are losing out. So there's still a possibility that it might pull down to the 50 instead of the other way around where the sellers were in control, smashing through the fib zone, the buy zone.
So just to be kind of clear, so I'm trying to figure that out a little bit in my head.
No,
So you wouldn't put the fishing order at the 50. You would kind of wait for it to would you wait for it to come down, maybe smash to the 50, do its little jig, and then start its way back up, and then hit it at the 61 on the way back up? Or would you be putting the 61 in on the initial way down?
when I was getting smoked at the 50, that's what it would do. But it was confirming price action down. So
Right.
it would come down to the 50, fill it, and then it would bounce up to like the 76 and then continue going down. Instead of me getting in at the 50, oh shit, there's like sellers getting in control. Let me get out up here for at least a 1 point or a 2 point, win. And then it would just reverse. It would just go against me.
So when did you get into the 60? So when would you get into 61 then?
When did I get into the 61?
Yeah. Because you're saying before, like a little bit ago, you said you didn't really like putting the fishing order at the 50 because sometimes it would blow through it. Just kind of like, but you said that you ended up you moved it to the 61 as your.
Yeah. So I adjusted to the 61 when I got burned like 4 or 5 times at the 50. But for some reason, it would work out more at the 50. And like I said, I would go back to see the screenshots to see if the candles look different. And that's what I had identified. So
Gotcha.
when I was putting fishing orders out at the 60, if I look at this screenshot over here on the right, that's what I want to see. When I see candles, like a red candle like that, I would have fibbed that out and put a fishing order out right here at the 50. But if you see a candle like this, but the next candle is almost a full body red, that means the sellers are in control, or they might be in control, and
Right.
they might pass your zone. And that's something that I didn't realize at the time. I'm not sure why I had picked it up. Maybe after getting burned a few times, I picked it up later, and then I had just adjusted it to the 61. I think Waves, he uses the 76, or is it the 76? Whatever the 70% fib level is as his confirmation. And to me, that's that's more leaning towards a long trade. Like, yeah, but it also depends how you're taking that trade. Are you entering from the bottom, or are you entering from the top? If you're entering from the top, the 78 for me would be a little bit too late to get in. Thanks, Tom. See you guys next week, or see you next week. It's kind of hard to explain, but that's the main gist of it, is that I started seeing the candles and I wasn't, because I watched that fib lesson. I was like, great, this is perfect. It's my whole trade plan right there. But the thing that I didn't take into consideration is, like, let's say I had fib this level out right here. You don't want to see this. You see a big red candle like that, don't put a fishing order out. Because look, obviously it went smashed through. But I was like, oh yeah, the buy zone. I'll just put a fishing order at the buy zone. It's always going to work out. And that was me subjectively thinking, I'm going to get in at the 50% and it's going to work out. It's going to work out. Lo and behold, the sellers were in control in volume and TTM was against me. And back to the basics. where stacking catalyst makes that difference. Stacking catalyst and the candle formation, of course, especially with, because honestly, would you, if you fib this out right here, you seen the first red pullback, right? Well, the second red pull, well, yeah, it would be considered the first red pullback. If you didn't see this, none of this right here, would you guys feel comfortable putting out a fishing order after seeing that red candle? If you would have fibbed that out, that probably would have hit your buy zone. And then look at right away. Or something like it's a little bit choppy, like this, where it's kind of, and the wicks tell the story too. If you see like a candle like this, you're like, is it gonna pull back? Let's just say, for instance, you didn't see that. Is it gonna pull back? Well, you see 3 big top upper wicks right here. There should be a chance to pull back. But if it's a full body red, then you're gonna go, it might smash through my zone. That and only stacking more indicators on top kind of helped me. That's where the moving average cross, I took that into consideration. Sometimes I would get a false 921 cross, and I would never get the 50 cross over here for confirmation. And it would just smash through the 50 fib. But that's where I was like, oh shit. You got to stack up catalyst, look at the candle formation, and play your play. Hopefully that didn't confuse you more. Wave says I did use a 78% fib for a long time. However, I have pulled that back to the 6150 channel. I say that channel because I missed a lot of trades waiting for the exact 50 tag. See, and Waves has the opposite of me, where he's missing trades. Me, I was getting smoked.
Right.
But like I said, that all goes into the candle formation and volume, RSI, TTM, whatever you use. But me, I've gotten more consistent with the RSI and the MACD alone, combined with the fib.
Yeah, absolutely. If I was to look at a lot of my trades, I'm actually going to collect them now that I thought about this. Because I have a bunch of red trades where I like, waited for the 50 fib pullback and like got smoked and stuff. But it was way before I was using RSI, way before I was like actually good at reading volume. I'd never looked at MACD or like certain crossovers. So I'd be curious to see what was going on in like my sort of bag of confirmation tricks when I was getting smoked on those trades a lot, because probably my bag of confirmation tools and tricks probably wasn't really that solid.
Well, that, and you're probably trading subjectively. And I think most beginner traders trade subjectively.
Right.
Like me, I traded subjectively using the fib instead of looking at the chart, looking at the trend, looking at other catalysts, I was like, oh, I'm getting in at the 50. But why am I getting in at the 50? Because there's RSI, because there's MACD, because there's Bollinger Bands, because there's volume. That's why I'm getting in. But if I'm getting into 50 just to get in, then you're going to get smoked.
And what that is like when you're trading from FOMO, then it's all subjective. Like objectivity is completely gone out the window.
Yep.
Out the window. And when you have your screenshot on the your document, on screen with like all the questions, all the question rule questions, I was glancing at it and I was like, huh, is this a lot of questions? And then it occurred to me, like, no, it's not, because like one of my main problems is tunnel vision, right? It's when when the feeling of FOMO takes you over and you're looking for any little reason to like get in, if you even stop to do that. So with tunnel vision, it's like what you call it, you get hung up on one indicator or just like on price action or something. But those questions from your rule set, it brings into focus the larger view of the market.
Yep.
It's like it's anti-tunnel vision, or at least a larger view of that moment of the market. You know, it doesn't bring, you know, all the information of the you know, the weekly chart into your vision, but it does make that moment of the market potentially very crystal clear. Whereas if you're just like, look, I gotta get in this one before it gets away from me, it's like you're not looking at shit. Or you're just looking at like one little aspect of what you're looking at, just like, yeah, once it pulls back to that 50 RSI, I'm in, and then it's off to the races, and that sucks too. So.
Yeah.
But yeah, so those real questions, no, it's not a lot of questions. It's actually very what you call it.
Well,
Very
you may think there's a lot of questions, but you're already answering those questions. Like you can start answering those questions ahead of time. Know what I'm saying? You see the arrow. What do you see? What do you want? You can start asking your question. Do I get a green arrow? Yes. Do I get a higher low? Yes. Can I fib the play? Yes.
Hmm.
You know, you're already asking yourself, okay, is MACD converging or whatever you call it, closing in on the average line or whatever?
Yeah.
You're already halfway through the questions and then you're just waiting
Yeah.
for
Yeah.
a
Very
couple.
true.
You're waiting for a couple of other questions that pop up. Another way that you can kind of do it is kind of align the questions together. You know what I'm saying? So the first three questions of each setup are the same.
Ah, no.
Know what I'm saying? The fib play rules, the first three questions are the same as the first three questions on the RSI.
Yeah.
And then ultimately later, you're going to be able to combine those three plays together. Know what I'm saying? Like you might get catalysts that you don't use on your MACD RSI catalyst rules, but there's a catalyst over here that you can utilize to add up to three catalysts on your RSI MACD play.
Yeah. Yeah. Absolutely. Yeah, for sure.
And you're not going to be confused. Right now, you're confused because you're trying to chase the play
Right.
instead of identifying the play, asking your rule questions, and following through that play. Right now, you're like, fuck, I see a MACD play. Oh, I see a Fib play. Oh, I see a RSI play. Oh, I see a Bollinger Band play. Well, you're like, well, which one should I follow?
Yeah.
You're like, okay, I see a Fib play. Whichever one you identify first, try to answer those questions. And that's where I'm saying where if you make the top three questions or the top five questions the same,
Yeah.
you can, okay, the top three, I would just go with the top three. You
Yeah.
know, whatever helps you move faster. So the top three questions are yes for the fibs, but for the RSI, only the top two questions are yes. So the fib has a little bit better odds. Let me try to use a fib play.
Mm-hmm.
And
Yeah.
then you go through the line of those questions, and then you're like, okay, this play might work out. Let me put a fishing order out, or let me buy the bid right here.
Well, this is a good example of it, because this play here is a really good Bollinger Band, RSI, and MACD setup play, and it's also a really good fib play. You know, it's really good. So it's got elements of they share a lot of the same elements actually, which is cool. It's just like when I say like the reason why it appeals to me to play it like as a fib play with, like, you know, with this fib drawn from this moving average down to this ad zone, it's just like, to me, it's just more apparent that there was a higher low before this higher low. It's kind of cool.
And
But
let's. Oh,
go
sorry to
ahead.
cut you off. Go ahead.
Oh, but also just as a Bollinger Band RSI MACD play, like that could even, like when you see this one open green above this doji, like that could be an entrance. Am I right?
Yeah.
Or is that crazy?
What was the question again?
Oh, so like to play this like from the Bollinger Band's RSI MACD standpoint, like the Bollinger Band standpoint, it's like, yeah, you had the red close here, and then you had a nice doji that formed inside. And I was thinking, like, once this started opening green over that doji, I was thinking, shit, maybe that could be the entry right there. Like maybe, but I don't know if that's legitimate or not.
Yeah, like the way that I was trained for price action is when I see a doji like this,
Hmm.
if price like I immediately draw a trend line like on that little cross right there.
Right.
If price action holds above that, get in.
Yeah.
But that's
Even
just
on
a quick
do,
snap.
right. Well, do you wait for that candle to close, that first one, or would you like even get in while that candle's forming, or would you wait for these guys over here?
I would have probably got in the middle of this candle by
Right.
buying the bid.
Yeah.
Of course, I would have held through this pain right here, but
I mean, I've
that
actually done that play before with that entry. I did it once and it worked out really well. That's my only experience with
and
it.
and and going just based on that is not good. There's been times where I've done this and I got stopped out.
Right.
But
Even though RSI and MACD look good, or did they not?
yeah, but like that's what I was just about to say. I was like, with Bollinger Band being so low or close to this, then I would have put my stop loss like 3 or 4 ticks below that.
Yeah.
Because that's, to me, Bollinger Band is going to be support.
Right.
If this doesn't come, if it hits right here, it might come back down right here and then whack up. And
Yep.
that's why I would put it 2 or 3 ticks. But like
Yeah.
I said, that all based on your play style and your risk tolerance. You might want to be like, well, if it hits down here, I'm out. Or if it hard open closes below here, I'm out.
Yeah.
That's to whatever you can tolerate.
Right. Yeah. Yeah. It's funny because like when I see these happen, I do kind of want to get in. Then my conservative side is like, let's wait for something more like this to form. But it's funny, between this and that, I could start getting FOMO around here and like just start doing who knows. That's where like
And that's hopefully where those questions or the rules that you create will help you decide.
and that's exactly right. Because like, all right, so sometimes I get mad because I miss like an earlier entry, right? And then I'm like, okay, let me wait until something like this forms. But something around here, I might just, between the anger of not getting this and the impatience of waiting for that, something will happen to me in the middle, where I'll make like a goofy decision and it'll go like this, and this like was never going to happen.
Mm-hmm.
Something like that kind of scenario, if that makes sense.
Yeah.
But yeah, but exactly those questions, and that's like, it's like you were saying, like when you answer those questions, then you don't really feel FOMO anymore because you got that dialogue happen in your mind, right?
Yep.
Yeah, which is badass. Like you can't think of two things at the same time.
No, you can't be long and short at the same time, but you could be
Right.
choppy, you could be long, or you can be short.
Yeah. Yeah, cool. Well, I don't know this. Well, obviously this one worked out perfectly with the fib, but it was a day to day, So this is the data candle, and it just boop, popped it right up there. So, but in terms of finding the one setup I want to play, it's really similar to this one. Support, high or low. Look for a good ad zone entry, and watching MACD and all this stuff.
Yep.
Yeah.
Well, hopefully by next week, I would suggest try to find your ideal setup, and
Yeah.
then we can go into that deeper to start creating rules. I'll share my rules. I'll pin them in the futures chat. So anybody can get them and add to them or adjust them to what their plays are.
Yeah.
Um, like I said, you need to dive deeper because my questions are kind of vague and I know the meaning behind each of my questions. If you have any questions on the rules or the questions that I have on my sheet, feel free. I'll explain to you better. Um, Something Waves mentioned is a break is tremendous to clear your mind. I think all traders need to realize that they need to do this. You're already ahead of the game. I do think it needs to contain time, not even looking at charts. And that's a great point, Waves, is sometimes you just get overwhelmed with all the information getting thrown at you that you can't make 2 cents of what the fuck is going on. So sometimes it's good to take take a break. Um, I've started to implement that as of late now. 'Cause before I was just so addicted to futures where I would just want to look at the chart every freaking minute of every day. And it's like, dude, you need to chill out, clear your mind, because you're just gonna tunnel vision more. You're not gonna let your brain rest, and you're just like overclocking it. You're gonna burn out. Um, that's just that's just where you just need to sit back, take a break, a 1 week break, 2 week break, month break. After every time I blew up my account, I took about a 1 or 2 week break just to kind of reset, reevaluate. That's honestly that's where journaling kind of helps. Is you journal, right? And Brandon, he makes it a good habit to go back every time there's a data day. Brandon will go back to the previous data day. And that's great advice because let's say last data day was good news is good for the market, right? But sometimes good news is bad for the market. And that going back to the previous data day is going to kind of help you. Okay, if the numbers are bad this time, it might be good for the market this data day. If the numbers are bad, it might be good for the market. It's gonna help you decipher what the market is gonna digest, how the market is gonna digest that data. Is it good for the market? Is it good? Is it that first off, is the data good? That's the first question. Second question, is the data good for the market? If the data is good but bad for the market, like for instance, job numbers, right? Job numbers came out today. It was it didn't meet expectations. Jobs didn't meet expectations. What did Jerome Powell said last last time? He said that he needed jobs to be actually for the US to lose jobs, right? Because it's got to give or take. Either he's going to save jobs or he's going to save interest. He can't do both. He can try to do both, but he's going to fuck something up. So if the jobs are good, then that might be bad for the market because why? Because Jerome Powell can stick to his plan of continuing to increase rates, right? But if jobs are bad, that means that he can reduce instead of going 0.50, he can do 0.25 interest rate hike or even pause because if he pauses, that means that he wants companies to start employing more, but that's going to screw up the interest because people are going to get employed more, therefore buying more shit, causing demand to go up, causing interest rates to go up. But if jobs are bad, then he can do a 0.25, and that's already priced in. But if he does a 0.5, if he does 0.50, that might be bad for the market because it's gonna further cut jobs, and more companies are going to cut jobs, and then that's where we might see a big dip in interest or CPI or inflation. We're going to see a big dip, and then he's going to be okay. Next round I'll pause so companies can start hiring. Whatever, I went off on a rant or tangent, but yeah, going back to the journal and during your breaks is always good to go back and reflect on your journal and maybe reevaluate your trading strategy. It'll help you reevaluate or indicate what you're doing wrong, whether it's candle formation, whether it's price action, whether it's subjective rules that you have, um, not following your rules, breaking your rules. You're going to identify that. And if you really, really want to make this your career choice, or where you do it on a daily basis, your income, your primary source of income, you're gonna have to discover that one way or another someday or another, preferably sooner rather than later. But yeah, great talk, great session. It's been almost 2.5 hours. um
I
we'll
just
con-
I just went to the bathroom. Did I miss anything?
we'll go we'll so for next week, decide on your play, and
Yeah.
then we'll create rules around that, and bring up anybody in this session. Go find your ideal play, and we will help you develop rules or questions around that play. So we'll first concentrate on your favorite play, your best play, your most winning play. Identify that, whether it's a fib, trend, Bollinger Band, whatever strategy you use.
That sounds
Identify
excellent.
that, come back to the table next week, and we'll start creating rules to help you identify or help you make better trader decisions, and help you get comfortable with your trade decisions. Not be like, why did I enter that trade? You
Yeah.
want to enter that trade with a good mindset or a positive mindset, and trust your trade. Once you create the rules, you stick to your rules, and you see that and they, the main thing is you want to stick to your rules, right? Because if you stick to your rules, then you have a gauge, you have a baseline, right? You have a baseline of your rules. If you follow your rules to the T and you're still losing, there's something wrong with your trading or your rules. And we got to identify that. If there's something wrong with your rules, then we got to adjust your rules. Because if you're creating good objective rules, you're sticking to your rules, and you're still losing, then there's something wrong, whether
Yeah.
it's the rules or the trade.
Yeah.
Um, and only you bringing them forward is going to help you identify that, whether you can do it on yourself or we can help you with it. Um, but yeah, it'll help you because you have that baseline now. You're going to have that baseline, right? Then you're going to know how to adjust that. You're either going to know how to adjust your rules, or you're going to know how to adjust your trading style. But if you don't have a baseline, you're going to try to correct your rules and your trading style, and that's going to make the situation worse.
Yeah. You mean like baseline just in terms of like knowing what setup you're looking for? Or
Yeah, exactly.
yeah.
You want to identify your setup. You
Yeah.
don't want to be like, well, Semperfi always uses this fib. He's always throwing screenshots out there. Um, Brandon, he's always using the 1 minute, or the RSI and MACD, and you're chasing both of our styles. You shouldn't be chasing. You should pick one or the other, or combine them together and make your own, and create rules around that and stick to them. If you like, Connor introduced an anchor VWAP. That's still over my head. He talks it through. Even Brandon's on the boat now, and he's talking them through, and I still can't grasp it. I
Yeah.
get I
Man.
get it. I get the fundamentals and the rules of it,
Yep.
but that's still like I'm battling Connor and Brandon at the same time. And I was like, nah, just let me take it slow, stick to my strategy. Once I have some time to just concentrate on anchor VWAP, then maybe I'll freaking do it. Because
I'm glad you said that, because like when Brandon started like using them in his TA this week, I was like, oh man, I better hurry up and learn this so I don't miss the boat. But it doesn't have to be like that.
it doesn't, just take your time, and it might feel rushed because you're like, fuck, they're introducing something new. Well, if that's not working for you, or if you don't know how to use it, then don't use it. Use what you know. You stick to what you know. Um, and that's what's helped me kind of navigate Brandon and Connor. I do
Yeah.
like, because before it was Connor on one stream and Brandon on both on another stream, right? And they would both jump on at 5:30 and then they would split streams. I like that. I kind of like this better because there's two there's two point of views. Most of the time they're on the same level, but their targets are not on the same level. Sometimes they do, sometimes they're not. And it can throw you for a little loop de loop where you're like, fuck, I don't know what to do. And that's where identifying your play, and you could just listen to their price levels, like Brandon says 406 is a resistance because it's a weekly trend. And Connor says, well, 408 is my resistance because that's an anchored VWAP. And they both could be right, right? Because it can bounce up to 406 at Brandon's resistance, pull back a little bit, and then shoot up to the 408, which was heavier resistance. So they can both be right at the same time. And that's a bad thing about trading is everybody can be right at the same time. But who is going to catch that bigger play? Yeah, me too, Whiplash. I just try to pay attention to the price levels just to just in case it passes Brandon's level, then I know there's another resistance right above it or whatever. Or if it passes Connor's level, then I know there's a range between Connor and Brandon's level that we shouldn't get into. So if it's between 406 is Brandon's and 408 is Connor's, and that zone right there, that whole zone right there is resistance to me. Instead of saying, well, it hit Connors, but it didn't hit Brandon, so it's not resistance, it's still in the long trend. Well, that's just, it can get confusing. I get it. And I understand. But like I said, if you identify with the anchor VWAPs, then just pay attention to the anchor VWAPs. If you identify with the least Brandon style, then stick to that. Once you're more advanced or have the time to actually dive into anchor VWAPs or what, or even Brandon's new fib lesson where it's a fib within the fib, the hidden fib. That's something that I haven't implemented yet, even though I use fibs. And he's like, well, it's good and it does work out, but that's not something that I identify with right now. Maybe in 3 months when I'm ready to implement that. But hey, great talk. Thanks for coming. Happy Good Friday if you're a Catholic or a Christian. Have a happy Easter. Stay safe and get ready next week. It's going to be a fun one. See you guys next week. Have a great weekend.
See you, fellas.
Thanks for coming.